The Dangote Refinery is set to begin production in October 2023, 5 months after Muhammadu Buhari commissioned the facility in May after several delays. Now, this is coming in the wake of a fluctuating currency and an economic decline in the country. The company is set to begin by producing up to 370,000 barrels per day of diesel and jet fuel in October 2023 and gradually increase production to meet the 650,000 barrels per day by November 30. Now, Devakumar Edwin, the group executive of Dangote Refinery, defended the decision to sell in dollars and not in Naira by saying that the refinery's location is in a free trade zone, stressing that the facility will not only be refining Nigerian crude, but also crude oil from other countries across the world, and also saying that it will not be advisable to be solely dependent on Nigerian crude. Now, this is the conversation that we will be having today. Why exactly are they selling it at the dollar instead of the Naira? And what does any of this have to do with the country's economy? Now, joining me to have this conversation today, I have Chimere Iheonu, Economist and Senior Associate, Kwakol Market, Abuja. Thank you so much, Chimere, for joining us. Chimere, please, can you confirm you can hear us? All right, while we wait for Chimere to join in, we also have George Brown, oil and gas expert in Rivers State. George Brown, thank you for joining us.
Thanks for having me.
It's a pleasure, George. Welcome on the show. Now, I think I'm going to start by asking if you saw this coming. Was this a very predictable move by the Dangote Refinery, George?
Good afternoon, dear viewers. The things going on right now at the entry point or the resumption of production, and which will also translate to the shipment of products out of the Dangote Refinery. For industry watchers, it's not coming as a shock, but it's coming as a rude shock to Nigerians. We've always known that the Dangote Refinery, contrary to the impressions that Nigerians were made to have and to believe, Nigerians thought that Dangote Refinery is a national asset. It's a private refinery, it's privately funded, it's privately owned, and it is not a Nigerian asset, by the way. So Nigerians should not expect Dangote Refinery to produce products that will be sold to Nigerians in a manner that is not commercially vibrant for the investment and her investors.
Okay, I mean, speaking of expectations, I mean, one wouldn't blame the citizens of the country because it seems like our own refinery has been under construction for a long time. And it also looks as if we're not prioritizing it enough. And I remember when the Dangote Refinery was being commissioned, it was like, you know, a savior has been born for the country. So how do we ensure, or what can the government do to make us dependent on our own refinery? Because as it seems, it looks like that's the only functional refinery we have. And so we're kind of generalizing Dangote's refinery at this point.
Dangote Refinery is a commercial concern, just like every oil and gas endeavor. They are all commercial entities, and they are all investment and revenue generating vehicles that were established by the various owners, shareholders, or stakeholders, whatever you call them. I will not like to sit in here and begin to speak for Dangote and be giving them free airtime and leverage by consistently mentioning the name of the brand Dangote. Your station is not being paid for that, and I'm also not holding brief for them. But unfortunately, we must continue to talk about it. We all saw this coming. There is no way the Dangote Refinery will produce products in a way and manner that the end user, who is the consumer of the products that are being produced by that refinery, will end up buying it at their own terms. No, it will be sold at the terms of based on the terms of the producer and the marketer, because there are a lot of dynamics involved in oil production, oil going through the process of refining and down to the logistics side of it and the marketing side of it. So people in the country were made to believe that the Dangote refinery was going to ameliorate, not solve, was going to ameliorate the issues surrounding availability of products and product pricing. Nigerians were made to believe that way, but we have always known that it's going to be a changer, a huge game changer. It's going to change the dynamics. Now, let me just quickly go in. Now, there are modular refineries in this country. Over 40 licenses were issued for modular refining. And modular refining is actually one of the best keys or best approaches to reduce the issue of fuel scarcity, make availability more accessible, and also you now have the issue of the pricing of the commodity, the mix of the pricing mix. It will become more competitive because the modular refineries are producing smaller, and their target market will be within the vicinity. When I mean vicinity, maybe 2-3 states not far from where the modular is sited, because one of the preconditions of establishing a modular refinery is that it must be close to the source of production, which is the wellhead. Feedstock is always close by, so it is always established where you have clusters, and that makes the cost of getting the feedstock, which is the crude oil, from the wellhead or from maybe an existing facility to where the modular refining plant is always very close, very close. So all those things all these conditions put together makes the access to the feedstock, the production of the products, the feedstock, and also the marketing of the product not to be too expensive. And precisely in the month of May, if I'm not, I think around the month of May, the NNPC came up with a decision or a new directive, sorry, that the feedstock for modular refiners will be sold in Naira, though at the dollar equivalent, of course, but in Naira. And it was a welcome development. And most of the modular refiners decided to start tilting towards the production of PMS, premium motor spirit. Though a majority of them that have been able to start out of this 40, I don't think we have more than 5 of them, because the enabling environment to start modular refining is not very interesting in spite of the over 40 licenses that the government has issued. Okay. So the refineries were all excited. The refiners were excited. The modular refiners were excited that the products, the feedstock, will be sold to them in Naira. And of course, when it is sold to them in Naira, of course, in dollar equivalent, but just using Naira instead of the foreign exchange to buy it, it was a welcome development. And boom, the government now reintroduced subsidy. So those that were going into PMS, petroleum, as in petrol, premium motor spirit production, have now quietly gone back to their turf, which is not regulated, which is deregulated, and that is the jet aviation fuel and the AGU. It's deregulated. You can produce and sell at the sale or the purchase is dependent on demand and supply, market forces. So that's where they've gone back to. And you can see what Dangote is also saying, that as they are going to start production, that they will produce about 65% of their feedstock. About 65% will be dedicated to jet fuel and AGU, and not premium motor spirit, which means it's about 35% of their feedstock that will be allocated towards the production of premium motor spirit.
All
so
right.
it clearly tells you that there is a business model that is in place.
Right. All right, Judge, thank you so much for that. Before we go ahead, let me just confirm that we have Chimere with us. Chimere, please confirm you can hear us.
Yeah, I can hear you.
All right, thank you. Now, I'm going to come to you, but in the meantime, let's take a look at some fact about the Dangote Refinery that we think that the people should know about regarding the whole, sales and positioning of the refinery and all whatnot. So it's going to come up very shortly. While we take the facts about the refinery, Chimere, I want us to clarify. Okay, here it goes. Now, it says Dangote Refinery is the world's largest single train with a capacity of 650,000 barrels per day, with a 900 kTPA polypropylene plant. It also says the refinery can meet 100% of the Nigerian requirement of all refined products and surplus for export. Now, the diesel and gasoline from the refinery will also conform to the Euro specifications. It also says that the refinery has 177 tanks of up to 4.742 billion liters capacity, and it has 65 million cubic meters of sand dredged, costing approximately 300 million euros, using the world's largest dredgers. Now, Dangote Refinery is also designed to be able to process large crudes, even from many African countries. Dangote is executing a petroleum refinery and a petrochemical complex directly as an engineering, procurement, and construction contractor, which is a very huge project, by the way. And now, coming back to you, Chimere, one of the things that was said when asked the reason for trading in dollars instead of Naira was that the refinery is located in a free trade area, and so they have to sell using the dollar. Now, my question is, help us understand what exactly does selling at a free trade area imply? And must everything sold there be traded in foreign currency?
Thank you very much. So I don't think everything must be traded in foreign currency. A free trade area actually, it means that you can actually, which Dangote decided to adopt the dollar. But apart from this, I think one of the major reasons why Dangote is actually selling, or actually wants to sell in dollar, is as a result of the consistent depreciation of the naira in the parallel markets, and we've also seen a significant devaluation of our currency. Away from that Dangote is actually owing about a loan facility. Dangote owes about $2.7 billion. And if he should sell in Naira, it's going to take a pretty long time, a very long time to even attain some form of break even, not to talk of making profit. Dangote is a private investor, and intuitively, he's being rational with the fact that he wants to sell in dollar, because that is what a private investor should do to make as much profit as he can make. So I'm not actually saying that he has to remove, or he has to focus on making profit. What I'm trying to say is that he has to offset the loan facilities, the $2.7 billion. He has to offset it. It is no longer attractive to sell in Naira, because the Nigerian Naira has actually depreciated very significantly. So all these dynamics are some of the reasons why Dangote would always want to sell in dollar and not in Naira.
Okay, thank you for that clarification. Now, George, I know that you did mention that Dangote Refinery, as we all know, is private owned, private run, private establishment. But isn't there a kind of partnership that can be brokered between the refinery and the government, knowing full well that we need as much support as we can get at this point? Isn't there a way the government and the Dangote Refinery can work together to make these things available for the people, and maybe at a cheaper rate?
Okay. Actually, the refinery is partly owned by the Nigerian state through the NNPC. So the Nigerian government, the Nigerian state, is also a stakeholder, a shareholder in the refinery, and I think the business model of the business itself is what is determining how this business is, how the product, the sale of the product, the recouping of their investments, and to secure the loans that they acquired to to construct the plant will be defrayed, will be paid for. So I don't think that the sentiments that Nigerians are beginning to put forward will actually suffice, because if you consider the cost of depreciation of the naira against the dollar, and their capacity to be able to pay off those loans that they acquired in building the facility, it's going to take them a longer period to get that done. Besides, the model of setting up of the establishing of free trade zones is that to a large extent, whatever you produce in a free trade zone, by regulation, by the regulatory standards that are in place by the regulators, or the NEBSA, as they are called, the Free Trade Zone Authority. Most items that are produced in the free trade zone are actually not meant for the local markets, right? They are actually not meant for the local markets. They are actually meant for export market. Now, if you have to do backward integration and send some of your production back into the domestic economy outside that free trade zone that is actually a tax, relatively tax-free area, so to speak, you have to go back and do some payments of taxes and put all that together with the Ministry of Finance and the customs and all the other regulatory bodies before you can take what you produce in the free trade zone back into the domestic market. Otherwise, everything in the free trade zone is actually meant for export. And there are incentives that come with setting up shop in the free trade zone. So the government cannot go back, the regulatory agency cannot go back now and change it. Couple the fact that they are buying crude in US dollars, while modular refiners are buying crude in Naira, because they are outside the free trade zone, they are in different locations in the country. So they've been incentivized by being allowed to buy feedstock from NNPC in Naira, produce their products, and also sell in Naira. But again, they are buying the feedstock in Naira. It's just to conserve Forex. But it's at the dollar equivalent of the barrel of the crude that they are actually buying or acquiring the crude for production. So it's not different from the Dangote Refinery. It's definitely going to be that way. But I think that the multiplier effects of the benefits of the refinery itself is huge. The future is bright for it. But I know Nigerians want an immediate solution, an immediate reduction in price, but that will not come so soon.
All right, thank you for that, George. Now, Chimere, let's not forget we're also still talking about our exchange rate. And I think this will be a good time to ask what the projections of the currency or the exchange rate is, because at this point, our local currency is selling at 993 Naira against the dollar, which is, I mean, it's something that people didn't see coming in this short period of time. So it's would I say depreciating quite fast? And, I want to know what you think the projection is and what can be done about it.
We had hoped that the Dangote Refinery would be able to offer us some form of dollar liquidation, but as we have now seen, this is not possible because we also have to source for dollar to buy Dangote petroleum products. The major issue with our exchange rate problem is that we are not producing enough. We have had significant constraints in our aggregate supply, so we are not producing enough, and we are also importing a lot. And these dynamics would always not favor us. They would always, our naira would continue to depreciate because we do not have enough dollar. We do not have enough exports to offer us some dollar base. So these issues are what is consistently feeding into naira depreciation. The only way we can come out of this in the long run is to ensure that we are producing as much as we can for exports, and also trying some form of import substitution import substitution solutions to our problem. These are just the major reasons. We have a supply and a demand deficit of the dollar and the naira, and this is what is causing our exchange rate or the consistency in exchange rate depreciation in the country.
All right, thank you so much for that. Now, George, I would like to ask, about 3 months ago, we're talking about unifying the exchange rate. At this point, is that still very possible? How feasible is that?
I don't see that happening so soon because the environment critical to ensuring that we have a unified exchange rate is not just yet there. So I don't see the possibility of us having a unified exchange rate is not there. The demand for the US dollar has not abated. It is still increasing, and the CBN has to do more. The CBN has to do more in terms of a monetary policy, fiscal policy, and collaborating with the economic team of the presidency in this current administration to be able to address the issues. Otherwise, having an alignment is not going to be feasible so soon.
Okay. Thank you very much, gentlemen. I want to say a big thank you to Chimere Iheonu, economist and senior associate Kwakol Market in Abuja, and also George Brown, the oil and gas expert in Rivers State. Thank you so much, gentlemen, for joining us on the program.